Hey, hello everyone. Welcome to this episode number 16 of Chasing the Deal. This time we are going to analyze and to find a deal in an exciting market in the North US. This is a city, very cold city that is close to Chicago, close to Canada, and it is not one of the top markets on the US, but every market has its own particularities. So this time we are going to see Minneapolis, Minnesota. So join me to find out here in Chasing the Deal and find a property in this market. So, first of all, for those of you who have not seen an episode of Chasing the Deal, let me show you my star. Well, let me say it that way, my star co-star, my star software. I name it that way because uh, something is wrong with my internet connection. Uh, Let me see. Okay, hope. Um, I think cloud recording. Let me see. I think I have some problems on YouTube. Let me know if you see me on YouTube. Let me see. Um, well, I hope you guys because I'm using this Restream software and I don't know how to see if something it's if I'm live on all every channel. I can see if every channel it's live, but streaming. I don't know why I'm not on live on YouTube. Let me see viewing YouTube. Well, I think something is wrong with YouTube. I don't know why I. Mm, well, anyway, if you don't see me YouTube, you can try my other channels. Uh, you can see me. You can watch me on LinkedIn, and you can also watch me on Facebook. But okay, let's start with this. Let me show you this software, which is CoStar. Let me see Minneapolis here, and then as well. Let me show you this software. You can see market information here in CoStar about every major U.S. market. Like for example, Dallas, Houston. You have every market. You can find market information here, and also you can see even from other countries like Canada or even the UK. You can see market information about many types of properties like office, industrial, retail. But since I'm specialized on industrial, I always show you industrial, guys. Uh, so let's find the market for Minneapolis. So you can see here uh, the information for this market. And let me reduce the size of this screen. Let me. Okay. So so this is the information, the main information. Well, I don't know what's going on YouTube. Let me see. Why YouTube it's not working, guys? Let me let me see why it's not working. Live. Well, I don't know what's going on YouTube. So let's see. Well, if you don't see me in YouTube, I'm gonna record it and upload it later. But let me show you here the information on CoStar for the other channels. So you can see here at the top of the page, you can see the KPIs. Okay, so the first one is the inventory for this market. It's 439 million square feet. So you can see also comparison here with the last year, which is 2025, which is 2024. I mean, uh, and we can see it went up 0.61% from 2000. It changed. It increased 2 million, basically 2.6 million square feet up. So also under construction, we can see here higher construction here. You know, from the last year, it went up from 2.6 million to 6.3 million square feet under construction. That may mean the market it's hitting or it's going well. But usually in smaller markets, when you have a big facility, especially on industrial, you can get confused by this number because usually if some big company builds a new build to suit or new warehouse, big warehouse, you may think uh, the economy is growing so much, but it's only one company, maybe it's Amazon or something like that. So we will find out later what this number means. So we also see the net absorption here, which is it went down also. Well, it went down in contrast with this number. Uh, from 2 million down to 100,000 square feet. So what is net absorption? It's basically new tenants moving in. Okay, so it's basically new tenants moving in and leasing new space here in this market. Okay, so vacancy rate. Okay, so vacancy rate, we also see here low vacancy rates. So but actually it went up from the last year. Okay, from 3.81 to 4.4%. So also the market asking rent, it's not that bad for a middle market. It's $9 with 55 cents, and actually it went up from the last year from $9.25. And lastly, we see here this number. I like to see this number because usually it shows me if the sales on this market that are from new buildings or are from old buildings. So if you see a number around 100 to maybe 150 dollars per square feet, that may mean that the inventory we are transacting here, we are selling and buying here, it's an old inventory. Okay, because new inventory, new warehouses, and new industrial assets will be priced much more than $300 per square feet. Okay, because usually the construction costs at least are those numbers. Okay, so plus the land and plus the profit, you usually go higher than 300 per square feet. So also the cap rate here, we see a cap rate compressing a little bit, but the cap rate it's high. It's 8.7%, and actually it went down from almost 9%. Okay, but usually in secondary markets the cap rate it's not that low. Okay, as in main markets, because in secondary markets you don't have it's more risk for the investor, so the investor asks more money for the investment. Okay, so that reflects on the cap rate. Okay, so here we have first, uh, we have a summary of this market report, which says the Twin Cities industrial market. Well, actually, Minneapolis, it's a metropolitan area. It's Minneapolis and St. Paul. So that's why they say the Twin Cities. It's kind of the same thing like Dallas and Fort Worth. Um, and we see the net absorption of 200,000 square feet. Mm, it says it's usually same thing that happened in all the country. It says the absorption is basically 1/3 of the pre-pandemic. Okay, so before pandemic or in pandemic we had better numbers of absorption, and then we are in many markets we are just gaining old numbers again. So construction pipeline. Okay, so let me show you this. Also important here, it says that the the parts or the areas where of this market that are renting out better with lower vacancies are the northwest side, which is the one that communicates with Canada. You know, uh, so that may mean we have the main market in Canada. Okay, because the west market, we always want to see one of the first things we want to see in a market. It's the connections, the trade, how what cities or what countries or what other states it's this market depending on. Okay, so usually this number we can or this data we can get it from the vacancies or the new construction. Okay, the new construction of the absorption or the deliveries. So where are the developers building new assets, new buildings? So in this market, this is on the northwest. Okay, so that's where we are. where we are going to try to find something. Okay, so market asking rents. Okay, so let me show you some comparisons between the market and the national. So, for example, the rent, we have 9.55 per 9.55 dollars in the market, and the national average is $12. Okay, roughly above $12. So the vacancy rate here, it's a little bit well, much lower than the national, because we have here a 4.4%, and the national it's 7.6%, almost double. You see, so for example, availability, which is pretty much similar than the vacancy, it's 7.1%. Okay, the difference in availability and vacancy, it's availability. You may count a space that it's currently not vacant because it's occupied by a tenant, but that tenant will not renew the lease. Okay, will not renew the lease, so that counts into available space, but not into vacant space, because it's not vacant, but will be vacant. It's available. Okay, so also available space, it's when you have a tenant, and that tenant, let's say it has leased 100K square feet, and then then so economy turns down, and then that tenant ends up subleasing, let's say, half of that space, because he doesn't need that space, that big uh, warehouse or manufacturing facility. Okay, so that space that it's subleases or available for sublease, it's also counted into available space. Okay, so let me show more numbers. I don't want you to get bored. Inventory. Okay, inventory actually it's well, the square feet of all the buildings. Or actually here in CoStar, we can see the inventory by the numbers of buildings we have in this market, which is 10,000 buildings. So year ago we had 10,027 buildings, and now we have 10,064 buildings. So that means a change of, so that means 37 new buildings were built in this market. So you can start to see that this market is not very, active, because it's not very big market. Okay. But even in small markets, you can find good deals. So that's what we are trying to do here. So the vacancy, we can see also here some graphs where you can compare the numbers around time. So we can see we have a high vacancy, 10-year, we can see the 10-year average here, and we can see right now we are in high, all high numbers here in the vacancy. Okay, absorption, same way, we are all that, all low numbers. Mm, Market asking rent, all high. Okay, so here in leasing, we can see some numbers, different numbers for different types of space. For example, it says that logistics behaves better than special like manufacturing buildings here. It's something that I would expect, because Minnesota, it's not a cheap labor state. If you want to manufacture something, you maybe could prefer to go to the south, because otherwise you have to have some kind of heater on all the building. You have to, heating cost. You have to pay more wages because labor here is more expensive than in the south. So we should expect here in the northern states to be lower manufacturing activity here. Okay, so but what we can also expect, and what the report confirms, is that logistics, it's better, behaves better here. Why? Because we are close to Canada. Okay, we are close to Canada, and to the north we go. I think I don't know very much the states of or the provinces of Canada, but I think we go to Alberta, and in Alberta we have Calgary, for example. I think the first city we go to the north is Winnipeg. Okay, but anyway, in 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 Calgary, Calgary is like the Texas of Canada. So right now we have this oil industry in Calgary, and also in Canada we have food. Okay, we have food, and we can expect because of the things that are happening on the Middle East, we can expect that countries that has not as much as oil get the food getting more expensive. Okay, so because if you don't have oil, you have to purchase oil, and that impacts the food, because the food, the consumption is like a pyramid. So at the top of the pyramid you have the luxury items. You have luxury items. So when prices goes up, uh, when the prices goes up, and inflation goes up because of the oil, because the oil it's at the bottom of the pyramid. Okay, then everything at the top goes up in price. So the second thing you have after the oil is the food. Okay, so basically Canada is providing two of the main things that are at the bottom of the pyramid. Okay, so if we can expect food, oil prices and gas prices and food prices to go up in the US, then since Canada has a lot of oil, especially Calgary, and Canada has a lot of water, and it produces a lot of food, then we can expect companies here in the US, like wholesalers, to go Canada shopping those products, especially food, maybe oil, and then bring this food to the US and sell it on the US. So Minnesota, especially Minneapolis, it's in a good position to act as a food hub for the US, especially in these times where we have the Strait of Hormuz closed. Or they say they just reached an agreement that, 2 weeks. I don't believe it's an agreement. So we can expect the conflict to be longer than 2 weeks. So then we can expect Canada exporting more food to the US, and also maybe oil. Okay, but what we are going to do here in this market, it's we are trying to ride that wave. we are trying to anticipate those trends of those prices of the food rising, and those wholesalers or companies purchasing food in Canada and then importing into the US. And then we are riding this wave, and then we are going after those kind of assets where you can store that food, like cold storage warehouses. So what we are going to do, since here in Minnesota, according to this, these cold storage facilities has not, they are lacking cold storage facilities. Okay, demand exceeds uh, the actual storage facilities they have. So what we have to do is go purchase a warehouse and then turn it into a cold storage facility. Okay, that's what we are going to do, because in this, specifically in this niche, they have a lack of cold storage. Okay, so we have two options. We build new cold storage, which we may take more than 2 years for sure. So after 2 years, we may end up that crisis, that for food prices uh, may come to an end. So we lose the wave, or we can purchase something and then make some kind of renovation and adapt that space to cold storage, and maybe in 6 months we have a cold storage ready to to be leased, or maybe less. So that's what we are going to do. Okay, so net absorption, leasing activity. So you can see, so this market, as you may see by the numbers, may not seem very interesting. But if you have a good eye and you analyze all the data, you may find some specific niche where you can invest and you can make money. Okay? So, for example, here it says specialized, it's the less vacancy rate. Okay? Why they say that? Here in the specialized, it's also manufacturing, but it's also like cold storage. So I assume and I guess that this low number of the vacancy, that it's almost half of the vacancy on this market, it's because of the cold storage. Okay, they don't have uh, they don't have too many properties with cold storage here, and especially in these times they need cold storage to import food from Canada, and then storage in Minnesota, and then distribute it all over the US. Okay, availability, sublet share, vacancy. Okay, months on the market. Minneapolis, 8.4 months of the on the market. Monthly lease, 8.2. Probability of leasing, 5 months. Okay. Okay, rents growing. Construction. Okay, so I don't want you to get bored with all this data. So we already picture and a strategy, and that's what we are going to do now. So right now, I'm clicking this properties tab. Oh, excuse me. No, you have two ways to see the sales here in the properties tab, where you can see sales and leases, or here on the sales list. I always prefer this for the sale lists because I feel it's more specific. So let me show you here. We are gonna choose industrial, and we are going to filter up less than 50K square feet, okay? Because we don't want to invest a lot. So we can start to see that there are too many properties available for sale. So that's good for us, okay? So let me filter up by CoStar rating, because we don't want new properties, right? We want older properties like class B and C, and vacant properties. We want it to be vacant in order to to renew it easily, to make some uh, to put some insulation, some coolers, and make this cold storage facility. Okay, so the building, we go. Let me see. So we already know that the attractive markets here are the 94, the northwest. Let me see where this highway goes to. So if we go by the 94, then we reach the 29, and then we are in Canada, in Winnipeg. Okay, so Canada is very big, but I think there are not many routes to Calgary. So I think I would say one of the main routes to Calgary uh, would be Minneapolis. The other maybe mm, the other may be some small towns here in Montana, but you have the most of the population in the U.S. here. So I would guess that Minneapolis will be the main access for food, or maybe also for oil here, especially for food. Okay, we also have many plains here in Edmonton where we can uh, purchase many food here. Okay, all these plains, they make food. Okay, so let me see. Let me see how much, just to confirm how much cold storage do they have here. You can see if I select cold storage in Minneapolis, they don't have too many for sale. At least for sale, they don't have. So let me see what else we have to filter up. Amenities, parking, elevators, rails, sprinklers. Okay, yeah. Another thing we have to filter up is the clear height. Let's say at least 18 feet, because we need to store food, and usually they store it in racks. So we don't have anything lower than 18 feet high. Okay, so here we have 18, and then we have some, well, actually many. Let me filter up the size 20 to 50. Okay. Okay, so we have this one property, and let's say this one. Okay, so we have three options here. Let me select this one, and this one. Okay. Okay, so let me remove the others. Okay, so here we have the three options. Uh, I'm going to open a poll so you can vote for which property you want me to analyze, and we will analyze if it's a good deal to purchase it, and make some renovations here so we can make it a cold storage. Okay, so the first one it's native. It's the let's just call them International Parkway. The second one is Black Drive, and the third one, actually two buildings, it's McKinney. So which one you want me to analyze? Uh, three. Well, we have only disclosed the number, the for sale number here. The second one, it's 3 million. They are asking. I see it's pretty reasonable. This one is rational. So the first one it's not disclosed, and the third one it's not disclosed. So which one you want me to analyze? Okay, again, number one, it's international parkway price. It's not disclosed. It was built in 1977, and it has 27,000 square feet. Let me show you some. It has a good clear height. It's almost 23 23 feet. Okay. Okay, so the second one, it's Black Drive, and they are asking 3 million, and it's 26,000 square feet. It's clear height 22 feet, and the third one, it's McKinney. The two buildings. Okay. I don't see the clear height here. Properties. Okay, maybe because it's two properties. But for sure, it's more than 20. It's more than 18 feet. So again, first one, International Parkway. Second one, Black Drive. And third one, the two properties at McKinley. Okay, so I think we have a winner. I think we have a winner, and this one. It's Black Drive. So sounds promising. Let me see. It was built on 21 on 2001. Uh, so when we especially when we are trying to renovate and uh, to make some improvements to a warehouse, especially for cold storage, we wanted not too old building, not too old, because if the building is too old, we may end up spending too much money insulating the building, you know. So this one it was built in 2001, so sounds not that bad. So let me just double check if uh, it has a cold storage already. So say highlights it say prime location in Rockford Industrial Park with Highway 55, modern facility, 2019 expansion, excellent maintenance, flexible layout, factoring, office, manufacturing, and warehouse, high capacity electrical service. We have a high capacity electrical service here, so we made we may not worry for the electrical, for the utilities. Strong regional access with the I-94 and established business neighbors. Mm, this connectivity. We have a huge parcel. We have a FAR. I would say maybe 20%. Or yeah, it's 22% the FAR. So we may build some kind of expansion. Um, Dogs. We have the one dog exteriors, and we have drive-ins. Usually, when we are looking for cold storage, uh, it's good to have both. Good to have both a dog and a drive-in, because cold storage is usually for local the same market, so it, it's last mile, and also for distribution, so for other cities. Okay. Okay. Let me see the brochure. Let me show you the brochure. Replace. I want to show you the brochure. Where is the brochure? Where did I leave the brochure? Oh, this is okay. For sale, commercial, industrial building. Okay, they are asking 3 million. Let me go back to the co-star. On market for 4 months. It has been on market 4 months. Where is the brochure? Okay, yeah. Okay, here we see the site, the lot. Mhm. It looks like a good condition. Single tenant. It has HVAC, forced AC, warehouse ceiling unit heaters. Yeah, it is not a cold storage, as long as I know. I'm trying to find how much What's the share of the office space? So we have a big office here. We may have to demolish all that office space because we don't want it. Maybe we want a small office, like a showroom or something. If we I don't see it pretty necessary for a cold storage, but who knows? Many tenants have different needs. Um, Office space 7,000, manufacturing 7,000, and warehouse 10,000. So half of the space is warehouse right now, and also maybe manufacturing. They don't have. They have like open space. I don't know which one here is the manufacturing. Yeah, we can see. Yeah, pretty decent size for the racks. Okay. So what we should do here is add some internal or external insulation, for sure coolers. So that will be expensive for sure. But the building seems good in a pretty nice condition. I think this is warehouse, okay. Where is the manufacturing space? I'm trying to find it. Okay. Exterior, I think we have the a ramp here and a high deck here. Okay, seems good. Pretty good, pretty good. Okay, I don't see where is the manufacturing, but interior office, break room, light industrial. Maybe this is the manufacturing. Okay, so we may end up demolishing the manufacturing side part of this, and we have this as the okay as a warehouse space. Okay, let me show you again. Replace. Okay, let me show you again. CoStar. I don't know what happened with YouTube. Okay. So where is CoStar? Where the heck is CoStar? Okay, here it is. Okay. Okay, so let's make some fast calculation. Let's see some analytics here. For example, for the sub market, for the property, it says it's the rent, the asking rent, it will be 8.4. 8.4 dollars per square feet. Let me see if they have some lease information. Yeah, actually, it will. I will say we can easily double we can easily double the rent once it's a cold storage. But just let's see the numbers for this property as is. Market cap rate 9.1%. So here we have the net operating income here, 7.25, and the cap rate will be around 9.1. So we only multiply this number by the total square feet of the property. Again, this is fast numbers. 20 c 26,262 by 7.25. Okay, and then divided by the cap rate. Okay, so we got $2.12 million, a fair market value for this property according to these numbers. Okay, we may go up to 2.5 million, but I think it's a little bit overpriced. Okay, it's little bit overpriced, but again, everything is negotiable, as I say. So you can get the property for 3 millions, but maybe with seller financing, with seller financing, or maybe, you know, but I can think we can negotiate the price for sure, because the market it's not going so well, especially for this type of properties. It's not going so well. Okay, so we can negotiate down, and then what we will do is invest. Maybe I don't have the numbers here for Minneapolis, but I would guess turning into a cold storage would cost at least 80 per square feet, I would say. But then, I don't know exactly. If it's 80, we have to invest by 26 262. We have to invest 2 million. Okay, if it's 80 per square feet. So we have to make the numbers, but usually if we turn it into a cold storage, we can double the rent. So even if we invest 2 million, I would think it would be a good investment, because we can double uh, we can double the rent, and we can double the value of the property if it's a cold storage. So you have to research the construction cost for the cold storage, which I would say it will be around 60 to 80 per square feet. But then after that, you can double the rent, and maybe the property will go up to, let's say, 6 million, 5.5 to 6 million, I will say. Okay. So what do you think, guys? What do you think about this market? What do you think about this strategy? Uh, do you think there's another kind of opportunity here in this market, especially maybe oil? I will not go for oil, because oil, it's um, they are very specific. Like the oil is in Calgary, and the refineries are in Texas. So I don't know if someone would import oil from Calgary out to the US. Maybe it's too expensive. Uh, maybe it's cheaper to import from other parts of the world, maybe from Venezuela. But what do you think? What other strategies would you use here? What other types of properties, maybe development? This would be considered a value add strategy. but maybe you would go ground up. Okay, so give me your opinion, text, write it on the comments, and if you like this live, you can subscribe to my channels on YouTube. You can also subscribe to my or follow my page, the Nearshoring team on LinkedIn, or also in Facebook. You can follow me, and that way you will receive every time you will receive a notification every time I make a new live and a new video. And also, if you want me to help you to invest in a industrial property and also an office property, I also specialize in office properties. Uh, Here in the US, all over the US, I can help you. And I'm a commercial real estate agent with EXP Commercial. You probably heard about EXP because we have the largest numbers of agents all over the world. We have around 100,000, I think, agents all over the world. And we are in 22 or 23 countries all over the world. We are in the US, in the UK, in France, in Spain, in Mexico. So we have the largest number of agents in a single brokerage. Okay, this is not a franchise. This is a single brokerage. So we can cooperate with all the brokers all over the US and all over the world. And I can help you buying. I specialize in helping clients buying commercial assets for industrial and for office. So you can go to my website www.thenearshoringguy.com, and then you fill the contact form. So thank you for watching this live. I hope you like it. See you on the next one. Bye.